Morning, everybody. How's everybody doing this morning? Bright, fine, crispy morning in the UK. It's freezing cold out there. Walked round to the gym this morning at 6:30 for my spin. My God, it was cold. Freezing out there. Right, today. What have we got today? Let's have a look where we are. How many have we got in here? Fair few. Just wait for a couple more people to come in before we get on the news. Ended up about just over 7.5% yesterday. Did a little bit of drawdown. I've got a 1% loss so far today. I did try to do a little bit of aggressive move on S&P, which didn't play out last night. So with all yesterday's gains, all these profitable ones yesterday, I did a little bit of drawdown on the S&P, scaled out of some of these positions just to reduce a little bit of the pressure because I'm in a bit big being on two of them. Morning Andy, morning John, morning Vappy, Darmon, Jacob, Peter, John, again, another John, two Johns. So yeah, scaled out a little bit just to ease a little of the pressure on it. But I think we're looking like we're at the bottom on this run. This is all selling off ahead of earnings next week. Obviously, earnings kicks off next week. So yeah, not good day yesterday. Pretty good. NAS. So this little one down here. This is the loss that I booked this morning. Was this one here? So yesterday, I took a long, just literally 5 minutes before the close. Actually, not 5 minutes. 10 minutes, 15 minutes or something before the close. Took a long with an aggressive position with a really tight stop on it, as you can see here. And wouldn't you know it, what happened? Price came down to the pip, took out my stop, and then shot off. That's what happens when you use stops. So, yeah, didn't get it. But the reverse alert got me into another one this morning. We've had a lovely pullback this morning so far on the S&P and the NAS, which is a really nice 61.8 pullback and bullish price action going in at the start of London. So hopeful today we might get a decent push on the indices, but we will see. Apart from that, yesterday, banked a load of Aussie CAD. Aussies, obviously news-wise, let's look at the news. We had unemployment, really positive. Well, not really positive, actually. Positive. A little bit more than as expected, really, for the Aussies. So unemployment was good. Aussie had a little bit of a spike. We obviously had a really nice run-up yesterday ahead of the news, which is where I got out of those positions. And then we had the spike this morning, put in a big 3-bar reversal up at the highs. We've pulled back, got the reversal alert, but I would ignore that one because it's off of fundamental positive news. So I'll be looking for the pullback and push on that one. So we'll see what happens with that. I've still got the one position on that on the Aussie CAD. The only other thing I've got on at the moment is Euro Swiss. I'm really light at the moment on FX. I haven't got a lot of risk on. So I haven't found an awful lot I want to trade at the moment. So obviously all these sells on the euros I've got out of down there. I've left these two on and I said I'm going to wait for a pullback to jump in short again. We haven't had one and boom. So, you know, Euro Swiss, as we know, is not a healthy thing to trade long. So this could just come back. We played the 72 bounce, which is planned out perfectly, textbook. So that's all I've got on at the moment, really. Nothing else very exciting. We'll have a look at the ADRs in a minute. Andy, it looks like 44.65 is the line in the sand for the S&P according to the Elliott wave theorists. Stay above that, and 5,500 and 6,000 is on the cards. Yeah, quite possibly. I have traded Elliott wave in the past. There's an ABC pattern, basically, which is reversal. So yeah, if you study Elliott wave, you know there's 1,000 ways to trade the markets. But yeah, it's all bullish at the moment. So this on the S&P, we'll do a quick analysis on the S&P while we're here. This area here for the S&P is the support zone at the moment. We've popped into it this morning and started to push. We had a little push up this morning and we've had a little pullback. So there's indecision at the moment. We'll see what happens with London. But obviously, as you can see, we've had 3 big down days. Yeah, that type of movement is usually the correction. So this is a really, really nice spot for longs on the S&P, and the Nasdaq has hit the 200, which again it does every now and again, and it's perfectly in line with this propulsion gap that made the new highs before the run started. So this is where all the buyers are. So one or two things I think from a NAS perspective today, one or two things is potentially going to happen. We're going to get another leg down today, and we're going to find buying support in here, or we have found buying support here right now off the 200, and this is the bounce point. So that's what I'm expecting to happen today. Don't know which. London will possibly give us a clue. If London can pull this back down into this zone, that'd be really nice, because that leaves New York ready to pounce. Earnings today, we've got now Netflix. So that's after market though. So this is released at 4:30 Eastern, which is after the market is closed. So we won't see the impact really of this until tomorrow, unless they position ahead of it and put some predictive trades in, expecting a rise. But this is, don't forget, this is just 1 out of 100 stocks in the NAS. So it is obviously a biggie. Way down the S&P, look. So let me just move that down a bit so you can actually see what the hell I'm doing. So yeah, Netflix is number 14 on the NAS, so it is, it's a biggie. Change today is positive so far, pre-market. So yeah, it's all looking good for a rise, but this market is so bearish at the moment and so volatile as well. There's an awful lot of big candles going in at the moment, which is lovely, because big candles, big movement means we make big money, don't it? Basically, which is what we want, volatility. We can't make money without volatility. But yeah, it's another critical day here. This is where I was expecting to get the bounce yesterday and the push. We did get it, but then obviously they sold off towards the end of the day. So this is exactly the bounce I was looking for, which I traded. As you can see, I took a position there and got out there as we started to roll over. And I was expecting continuation, but we got the drop. So London today, if London can break back above that level here today, I think we will be good for an upside. But again, it's difficult to tell at the moment. Difficult to read the indices. Right, but anyway, let's have a look at where we are with ADRs. It's a morning full of energy and good vibes. Good to hear, Dappy. Right. ADRs, obviously, Aussie dollar. Interestingly, though, only Aussie New Zealand, which is a bit weird. So we'll quickly look at the Aussies. Obviously, we had the news, which we got the big pop. Aussie CAD, all that's done is basically retraced back to the highs of yesterday, so no massive impact there. Aussie dollar Swiss, same thing. Aussie dollar yen, Aussie dollar US. We just had the big spike. So this is a typical news reaction. It's just a volatility spike to get everybody G'd up, and then they'll come back, take your stops and run off with it. So Aussie dollar, New Zealand dollar is the only one that has actually managed to go anywhere. So if we look at the New Zealand dollar, you can see the New Zealand dollar had the inverse reaction to the Australian dollar news. So Aussie dollar positive, New Zealand went negative this morning. So that's why we've had that hit. We've had a beautiful hammer, a shooting star put in off of 175 ADR. So if you were up early enough to catch this morning at 175, this is playing out beautifully. What we quite often see with this propulsion move, but this is not it's not a really positive thing for the Aussie. Yeah, it's just not too bad figures on employment. Yeah, it's nothing that's going to suddenly make the Australian government turn around and change monetary policy. This is a reaction to monetary policy, not something that guides monetary policy. So it's a reactive news event rather than a leading news event. So what we tend to find on these big reactions that you get is a fade back into the areas the move started from and support, and then play the long out of there. If it's going to continue long, obviously, which means a weak New Zealand dollar. So really nice play on this one today, but it was too early for me. Playing out very nicely, but even on the 15-minute chart, you've got good targets. So I'd look for movement down and then potentially a push out of there. But that's the only one that we've had any real serious reaction to. Pound New Zealand, obviously, we've had the New Zealand dollar being very weak, and the pound didn't really do anything in Asia. So it's definitely all New Zealand, all this movement. So again, pound and New Zealand are sort of no real directional bias on. They're both shorts as far as the futures open interest is concerned. So maybe look for pullback and push, assuming we're going to get a continued weakness on New Zealand dollar during London. So London's opened a bit bearish at the moment on the pound. So I'm in a sell on Aussie New Zealand to take retest of the 5-minute. Good one. Yeah, so took the retest, reversal. That's a reversal alert there, and then obviously the retest. So good move all the way down to anywhere in here, really. You've got this area of accumulation here. Just be aware of, assuming it gets through that. Yeah, I mean, you'd be down. They'll want to. Normally, they will want to reverse this because you'll find a lot of positioning would have happened in here yesterday. We got a breakout yesterday, so there would be a lot of positioning in there. So we accumulated at the end of during the New York session, and then it all shot off. So they'll be wanting to add to their positions. So likely they'll bring price back down to add to the positions to go from there. So all the way down to that high potentially today. Aussie New Zealand 175. Oh yeah, sorry. There's just reverse alerts going off. Right, so that's what we've had today. ADRs so far. Keep your eyes on the New Zealand dollars because they've obviously had a decent move in Asia. So potentially we could see some New Zealand dollars hit ADR lows today because they've already obviously started on a downward movement. But yeah, apart from that, Asia pretty flat. 4-hour RSI extensions, no opportunities much apart from the Aussie dollar, New Zealand dollar. So my exposure at the moment is long Aussie. I haven't got any New Zealand on. So I can't really take this because I'll be hedging myself if I went short on the Aussie. But very, very nicely extended. It's a good little short play. Down to either there or there. It's a bit too short for me. So 40 odd pips. It's less than an ADR. I don't really like taking little scalpy things like that. I'd rather wait for a stronger push, basically. I don't like it when we've made that move literally in a couple of candles. I want to see us get there like that because you know that this is normal price action and there's going to be a profit take move off the back of it. This is pure manipulation in light liquidity. So it probably will. So it is a very, very good trade to the short side, but I'm not really, I'm a bit longer term than that. So nicely extended. So good short, but it's kind of already played out, hasn't it? Missed it a little bit late. Too late for me. New Zealand dollar CAD is the only other option we got this morning. Nicely extended to the downside. So Canadian dollar, I've already got short. Aussie dollar CAD, I've already got long Aussie dollar CAD. So if I take New Zealand dollar CAD, I'm basically doing the same trade again, so I'm doubling my exposure on it. So this isn't one I would take, but if you haven't got any Aussie CAD on, this is really nicely extended. We've got a lovely bullish engulfing starting to go in now. When we get this far extended away from the 24, it's a really good sign. We've had a really good strong push, a little bit of a profit take. Bears stepped in again to push it back down. So we are only just extended. This was where the trade was. So if you got into it earlier, the New Zealand dollar CAD trade, and you didn't get out of the position there, you will be taking second positions, I'd imagine, probably down here, waiting for that W to play out. So very, very exhausted New Zealand dollar CAD. It's very bearish, as you can see at the moment. So that was a lovely trade up there. But yeah, it's definitely due a pullback, but I can't see it really getting much higher than that unless there's some fundamental news which is going to change the fundamental bias on it, really. So short-term short and long-term long, John says, yeah, on that. So yeah. So yeah, Aussie dollar, New Zealand, yeah, short-term short, long-term long. So that's all we've got on the 4 hours. No opportunities. It's been really, really light on Forex opportunities so far this month. I'm really glad I've been trading S&P because I wouldn't have made a lot of money this month. I've had the EA running on my VPS, trading all H4 M15 pairs, and it's managed to bag 4.5% so far this month. We're 3/4 of the way through the month, really. A little bit 4.7 drawdown, nothing. But yeah, so that shows you how few opportunities. This is H4 M15 mean reversion. So it shows you how few opportunities there has been this month. It's not really been lighting on fire opportunities wise this month, unfortunately, but it's done all right. Right, let's have a look at the hourlies. So I'm just jiggling my platforms around. Hourly extensions, we've only got Aussie dollar, New Zealand dollar. And again, obviously massively extended on the hourly, but that is due to that push. So obviously we've gone from below midline in a very, very quick move. So H1 M5 mean reversion, that one will have been taking trades this morning if you've got that running. In fact, I've got that running as well. Oh, it's probably already in it. It's probably already out of it, actually. Yeah. I was already in it, actually. Yeah, the EA is already in that one. So yeah, so that's really all we've got. Nothing much, is there? It's a bit of a dull day today for entries at the moment. So I think it's just a case of today keeping your eye on RSI extensions and just waiting for stuff to start to move. Across the board, it's fairly. We've had these strong pushes, and we've profited off of all of these, and now we're just sort of pulling back. So the RSIs are all kind of midlines. So it's just a waiting game at present. But some decent moves started, obviously. So look for pullbacks and continuations, but nothing's really in a good level for me to take at the minute. Simon, me too. Forex has been awful. US indices has been the place to find the trades. Yeah, we've had loads of stop movement. It's great. Lots of volatility, but Forex has been very rangy. Let's have a quick flick through. Let's stay on the hourlies because then we can see the last sort of this goes back to obviously the beginning of January, end of December. So you can see obviously since we started January, Aussie dollar Swiss been ranging. Aussie dollar CAD been trending. We've taken a few trades off of that as we've got extensions, so that one's been okay. Aussie dollar yen, slow trades down. I haven't traded any yen this month. That's partly why I probably haven't taken too much FX this month, because I've been sitting on the sidelines waiting to see what yen is up to, and I still haven't got a clue on the yen. It's not established itself in either direction, has it? So Aussie dollar yen, we've had a couple of opportunities on the hourly. Nice little trade there. We had one back here. Again, these are all, none of these have got directional bias. Aussie dollar, New Zealand dollar, just nothing. It's flat as a pancake. Aussie US, fair few trades on the Aussie US. So that was a nice short. That was a nice long, beginning of December. But I was trying not to trade the very first week to stop basically getting into any squeezes beginning of year, which quite often can tend to happen. But yeah, nice one there. And we got extended. Nice drop out of that one. So there's been a few opportunities on the hourlies to trade. But as I say, I've been kind of sitting on my hands a little bit. Lovely little squeeze on the CAD Swiss. This was the Swiss franc weakness that we got into. Played that one from the top. But again, since then, it's, sideways, isn't it? The whole market's, not really, a lot of stuff has just not got directional bias on it at the moment. You can see here, we've not gone anywhere. We've had a 1.5 ADR range on the Swiss yen in, a week and a half. It's terrible. Absolutely terrible. Same here. 1900. Just under 2 ADR move in over 2 weeks. So it's just it's a funny old flat market at the moment. Everything we're expecting to trend like the euro down is working fine. But apart from that, and that's obviously what I've been taking, the euro shorts. Euro shorts are safe as houses at the minute. And that's really all I've had an opportunity to take, as you can see. It's euros. Been shorting the euro. Euro yen's some no opportunities. Just about there, 5th of January, but that was too early, as I said. You had one there. No other short opportunities. So, terrible. We'll have a look at the indices as well. I won't go through them all because they're all very similar. Aussie New Zealand. John. As a breakout and trend trader, I've done well this year. Now I'm here. It should be a good combination. Cool. Aussie New Zealand. What a move. To announce a retirement from 7 to 8 shifts. Not quite sure what that means, Dappy. I don't quite understand that one. Aussie New Zealand, are you saying it's just moved, is it? It's coming down. Right, if the 4-hour trend bias is a buy, the ribbon is green, but we get a 4-hour reversal to sell side, should be taking sell only on lower time or still looking for buys. Entirely up to you how you want to use directional bias. So if you want to go directional bias on the, so if you're trading 4-hour and 15-minute, yeah. So last reversal alert on Aussie New Zealand was a long. So the bias is bullish. Moving averages are green. Yeah. If you get a reversal alert to the sell side, it's entirely up to you. You're trading counter trend, obviously. Market structure trend is long. Moving average trend is long. If you short anything on a lower time frame, you're just counter trend trading. Nothing wrong with counter trend trading. Yeah. Beautiful counter trend trade this morning and retest. Yeah, you can take it, but it depends. If you're a trend trader, you won't take that. If you're mean reversion like me, you can. There's no answer to that question. It's down to you, really. If you get a 4-hour reversal on something, so, for example, we're bullish here. If you get a reversal alert there, obviously that will change to a bearish bias. Moving averages are green. So, I don't really have an answer to that question. It's a personal choice. Some people want all the stars to be aligned to take a trade. Other people will just ignore that, and just basically take decent reversal alerts like that they see at support and resistance. And this is what I keep going on about. You don't take every reversal alert the indicator gives you. You take the alerts at logical areas. It's logical, in market structure. This is an odd expanding wedge, but it's a logical place for liquidity run to happen. So when you get a reversal alert there, if that liquidity run is valid, this is coming down, and you would get out somewhere down there. If it comes back down to here and puts in a W and gives you a reversal alert, that's a decent support area. So you would take that one long. Yeah, it's up to you whether you take the shorts. Yeah, the bias is bullish. So if you want to take a short, fine. If you want to play safe, probably longs only. But again, personal choice. Me, I'd take anything I think looks good. But I always want to stay in line with, ideally, in line with COT and moving average trend direction. But at the moment, we've got no COT bias on anything, so COT's pretty useless in a minute. Can we take a look at GJ? I'll look at the indices in a minute. GJ. Yeah, so yen obviously is a bit of an anomaly at the minute. At the moment, it's a long, but we've looked at this one. It's just odd. We had this big, strong. This is yen weakness. Yen coming back strong. Yen weakness. Is yen coming back strong now? Possibly. It's difficult to tell. It's non-directional, isn't it? At the moment, longer term, at the moment, I would say it's a short, but probably, potentially, only down into here somewhere, maybe even ADR today, and then push off to the high. We don't know if this is going to start to trend or not. Nobody knows, do they? But short term, if you want to take trades on this, it's had a very, very big, strong move to the upside. We've gone into a consolidation, which we've broken out of, but we haven't convincingly broken out. We've got stuck in this accumulation. So I don't know. Couldn't tell you. I'd be more bearish at the moment than bullish, but only because we haven't had a profit take move on that. Yeah, which is what the market does. We have a big, strong push, and everybody that got long in there hits the sell button, which creates a sell. So everybody profiting, profit take. And then they continue, accumulate, and go, yep, we'll take it short. When they've taken it short, they have to hit the buy button to exit their positions. And then you tend to get an accumulation, which we didn't in this case. But and then everyone started going to buying frenzy, accumulate, buy, accumulate, buy, accumulate, buy, sell. So we're in the sell cycle now. We've bought. Now everyone's hitting the sell button to get out of their positions. How far they're going to sell before they want to start buying again, don't know. They might want to just keep selling, accumulate and drop. You can't tell. Nobody knows. If anybody tells you where the pound yen is going, they've either got some time machine, which would be very nice, or they don't know what they're doing, because you don't know which way this is going. No one knows which way this is going. There's fundamentals which will give you a directional bias, but at the moment the fundamentals don't really point any direction on anything, because we're in COVID times. And I would say for the pound, inflation is at not all-time highs, but inflation is at 30-year highs in the UK now, which is never really amazing for the currency, because the more expensive stuff gets, the more difficult it is to buy things. The the less people will spend, which tends to hurt the economy, which quite often will bring the pound down. And also, the Bank of England has hinted at more rate increases coming in. But, it's when you're trading something like the pound yen, the yen will be in charge. The yen is a way stronger currency than the pound. So even if the pound weakens or strengthens, if the yen decides to suddenly move, the yen will push this wherever it wants to be pushed. So you don't really get an awful lot of say in it, to be honest. I'm 0.75 ADR from being out of a short. Oh, right. Okay. So if you're in position short at the moment, yeah, I mean, it's still going down. All you can do really is look for support and resistance, and look at potentially where we're likely to bounce from. So look at all these little accumulation areas here. So push, accumulate, push, accumulate, push, accumulate, push. So there is a breakout. There is a breakout. We've broken down below that one. So here is the next spot for getting out, which is going to be probably about 3/4 of an ADR, funnily enough. So yeah, what's ADR? 107. That's an ADR away. So you got a full ADR there. That's where I would say is the next potential if we're going to come down. But it depends if the 24 is going to support it, doesn't it? So I mean, this is the trouble with trading, and this is why everybody gets sliced to pieces all the time, because you can give 10 people a chart and they'll all give you a completely different analysis on it. At the end of the day, you ride whatever the market is going. That's all you can do. You get on the train and you get off. So if you get on the train short here, and like say you got on the train, where did you get on the train? You got on the train somewhere around there, I reckon. So you got on the train, you got squeezed by the yen, you kept getting on the train, and now you're waiting for it to go out. So all you can do is take profits, scale out of these positions, and if they decide to carry on going down, happy days. If they push back up again, you scale in and wait for the next profit take move, and then you get out. If you're using stops, if you're a stop loss trader and you're getting short there, you're stopped out. You've lost 1% of your account. You get in short, you get stopped out. You've lost 2% of your account. You get in short, you get stopped out. You've lost 3% of your account. Position traders, we haven't lost a thing, have we? We've got a position which we're managing, but we don't know which way it's going to go. We can only look at history, and historically this thing is just doing that at the moment. So until it just shows us otherwise, let's assume that it's going to continue to do that. That's all I can say on that one. Sorry, I'm not much help, am I? But I don't know is the honest answer. Right, so US dollar, looking at yesterday's move. So we looked at this one yesterday, the dollar index. We had this big accumulation, which we finally pounced out of. This is where I was looking for a bounce, which is where we got the bounce. And we broke back up into this support. So this resistance, as it should have been, hasn't held. So at the moment we're pulling back, but with some very, very nice looking wicks. So really bullish price action at the moment. Big old long wicks to the downside. Buyers are stepping in every time the market tries to push the US dollar down. The buyers are stepping in. This level here, let's draw it on properly. This wick here is at the moment acting as support. So if we can get an update today on the US dollar, ideally an ADR push, that would confirm that this is just a spring on this accumulation. So we will be looking to push highs, new highs on the US dollar at some point in the next month. So probably sooner than that, actually, if it's going to happen. So we've got no US dollar news, obviously, this week. We've got bits and pieces on the US dollar. Nothing particularly exciting. Philly Fed quite often can do something, but the rest of it is just, yeah, nothing particularly exciting. So it's next week. We've got some US dollar news coming in. We've got FOMC next Wednesday, which is going to be the biggie. Obviously, the rate announcement. If they change rates, that could well be what kicks the market upwards. If they allude to changing rates, could have the same impact. And then we've got GDP and we've got PCE. So next week is the big one for the US dollar. So this week is kind of positioning back into this range, and then hopefully a big push up to the upside on it. So obviously the current positioning from COT bias perspective is longs. So the market is positioned long on the US dollar. So it leads me, if you look at how long this thing has been positioned long, and since September, we've had the move, and the market has remained long all the way through this accumulation. So that kind of tells me they've been accumulating longs. And obviously, if they've accumulated longs, that's where they want to go. So, yeah, this is looking hopeful today. I'm hoping today we get a decent push up. That will give us some real directional bias, and that will kind of confirm also my bias short on everything against the yen. So I'll be looking for shorts against the yen because I would expect the yen to power up along with the US dollar. But who knows? There's lots of stuff happening at the moment, which is kind of right on the edge, isn't it? So everything is kind of teetering on explosive move points. But from an FX point of view, as I say, there's not really much else today that we can look at in this session anyway. So we need to let the market play out in London and see where we end up at New York Open. So just before New York Open today, we've got the US news, we've got the unemployment claims and Philly Fed. So we'll see what happens with those. They might move a little bit for us into the New York session. And then we've got home sales, which is doesn't do anything. And then we've got crude later, which could affect the CAD. So we've got retail as well on tomorrow morning. But yeah, we'll see. But there's not really any opportunities at the minute. I thought the word was out for rate hikes in the US. The big news, if they don't do it, yeah, well, it's forecast not to be risen. So the forecast is for rates to remain the same next week. So obviously, if they do raise rates, then yeah, that will have a big impact. But don't forget, it's a long-term outlook. So, it can flip on a dime. And it's usually rates which tend to be the catalyst, which will obviously move it. So, can't tell. You just have to take a bias and take a position on it and deal with it as it plays out. Whatever they do, and this is the thing, that you have to understand with everything to do with any currency. If rates cause that, they have to do that. Because if they don't do that, everybody that did that won't make any money. So regardless of whether you get positioned correctly or incorrectly, whichever it may be, when the news comes out, there will be a profit take off of that move. Yeah, and that's how you make money, is by scaling in and waiting for the profit take, and then you get out on the profit take. Yeah, that's how it works. Well, that's how I work. Obviously, you work any way you like, but oops, one more. Yeah, so if I get in and I'm wrong, it goes down, I get in again. In this case, I got in pretty much the same rate and wait for the move. Yeah, so it's pushed down really, really hard. Yeah, everybody that's been selling since last Friday is now taking profit on their moves. Yeah, look at the news. What do you think that news was? That news that came out yesterday was not massively positive, or came out this morning, was not massively positive for the Australian dollar. There's no reason, apart from people scaling out of positions, for that move. Yeah, they used the news as the catalyst. So they wait for people to dump liquidity into the market when the news comes out, and they use that to move the market to take profits on their positions. That's how it works. And you can see it's coming down now. If that was really positive news for the Australian dollar, that thing would have gone like that. It's not fundamental news. It's just a spike, profit take run. I heard the first rate hike would be in March and another later this year. Yeah, quite possibly. But, you know, these things change. They do drop the clanger every now and again. If you look at the news, you can see historically. So look at the Fed fund rate there. Whoops, let's go up. Yeah. They haven't done it for ages, have they? No. So, you know, it's highly unlikely that it won't be as expected. The pound they did it with last year. So we had it changed. But, you know, this... here we go. There wasn't a forecast on that because this was COVID. That was the COVID drop in March. That's when it all went Pete Tong. Sorry, if you don't know who Pete Tong is, he's a DJ in the UK. It's rhyming slang for wrong. It went wrong. I forget I'm talking to an international audience. Yeah, so there you go. For example, there, when they are going to change it, it's usually forecast and then it happens. Yeah, 0.25. They said they were going to go down to 2. They went down to 2. The rates don't often change. Every now and again you'll get one. I'll just kind of go back to find one, to be honest. It's been a long time. There you go. 2008 was one. They were going to go down to half. That will be a massive fundamental shift that the banks weren't expecting, or the funds weren't expecting, and then you'll get a massive movement. But, you know, it doesn't happen, does it? So don't worry too much about it. Whatever happens, it happens. Like I said, you get on the train, you get off when you can. I better go study some more fundamental news. Don't need to study it, John, really. Use the COT report. Yeah, these figures here are generated by all the big analysts. Yeah, so there's hundreds of analysts sitting in all the big hedge funds, banks, institutions, scorecarding all the fundamental news to tell their guys to take directional bias in the markets. And this is the directional bias at the moment for the markets. Yeah, you don't have to do it yourself. Just this positive and that's negative. You go long on US dollar CAD. If you want to learn all the fundamentals, you can do, but it's a big job. Akin to being a surgeon. Economics degree. I haven't got time to do an economics degree, so I just follow what the rest are doing. They know what they're doing because they make more money than God, don't they? Anyway, March sounds about right. All about the inflation fears. Yeah, so all economies. We in the UK are in March are going to start dumping COVID restrictions completely. Yeah, so even if we catch COVID in March and we test positive, we do not have to isolate anymore. That's the plan. So in 6 weeks' time, if I come down with COVID and I'm hideously ill with it, I can still go to the shops and give it to everybody. Because now with this new variant and the numbers going up and hospitalizations dropping, it's a case of they're thinking, right, well, this is now becoming much more flu-like. So economies, infrastructures, and everything is going to start to get back to normal in the UK. So we're going to now start to worry more about inflation figures and all the stuff we used to worry about when we didn't have something like COVID affecting the markets. So we're coming out of kind of the COVID era. We've had 2 years where the markets have been sitting there really being affected by COVID. And it's all going to come to an end. So since the drop, basically, we're now going to be able to get out of these ranges, and economies will start to get back to proper trading, and we will start to see more directional movement, hopefully. Obviously, as long as another variant doesn't come along and knock us all for six. But you don't know what's around the corner, do you? Which makes it very difficult to forecast anything in the markets, obviously. So, but anyway, that's all I've got for you today, really. There's nothing much else to get into position-wise. So I shall be keeping an eye on S&P and NAS today. At the moment, we've gone nowhere in London, just wick after wick after wick. Much more bullish, obviously, as you can see. Big wicks to the upside. So the bulls at the moment are in charge, but no directional bias. So we might find we get a rotational London waiting for the New York, hopefully, to kick us up today. But so far, nothing. So anybody got anything else they want to look at? Any other questions or anything pairs-wise to look at? I've scanned through most of the pairs, obviously, and there's just no opportunities for mean reversion at the moment. So keep your eyes on the dashboards, though, if you've got them. And obviously wait for alerts to come in. And obviously you can start to act on those as and when. But at the moment, nothing that I'm interested in. Euro Swiss is coming down nicely. If any of you are still in Euro Swiss and have managed to hold it. Oh, wish I could change the right chart. So London's opening week on the Euro. Across the board by the looks of things. Even getting battered down against the New Zealand dollar, look. So decent moves down on that. So it doesn't look like I'm going to get my my additional entry on that, which I was looking for up here somewhere. Doesn't look like we're going to get up there to get that position in. So all this selling pressure that came in, we tapped up into it, and the sellers stepped back in, pushing us back down again. Your thoughts on US dollar CAD? US dollar CAD long. So yesterday, look at that. So we've been sitting in an accumulation here for a week. Yesterday, they robbed everybody that's been long. And we are sitting now in an accumulation. So if any of you are familiar with Wyckoff theory, this is a Wyckoff spring. Well, it's just about, it's a debatable one, but so what we would expect from here is a push to the highs and an accumulation and then a break. Either back up to the highs or obviously off, back up to the lows there or off. So look at these areas for targets. So long US dollar CAD. But again, this is what happens when there's news. There's no news. They just accumulate. They're waiting for something to kickstart the market. We haven't got anything to kickstart the market at the moment. So this is what partly the problem. We have light news weeks and market doesn't really do a lot. So, but anyway, okay, quick question. I watched the videos and I understand adding the second position on a move against, but do you add when it moves your way from the start? No. So I don't add into positions. You could do if you wanted to. So if you want to do that, that's fine. I'm just trying to think of a trade I took. Oh, it's this one. There you go. It's here. So US dollar CAD, this position here. So I tend to get into the market, and what I'm looking for is to bank roughly 0.5% to 1% a day from FX. When I've got some positioning on, let's say at the moment I'm virtually flat. So what I'm looking for usually is roughly half an ADR to an ADR move in my direction. So down here, I got in. When was this? On Thursday last week. So I got in on Thursday last week and took my TP. So that hit my target basically. So I'm out. And that's basically what I'm looking to do. So I'm using H4 directional bias to tell me when I should be looking for positions. Yeah. So we pushed down all the way down here. Big push down. And this is the first point. Got an alert to say get in. So I got in, hit my target, and I got out. If you wanted to, you could trade H4 all the way back up to here, couldn't you? And you could have added. But what would have happened is it would have got you back down to virtually break even. The problem with adding to positions that people have is when you take a trade and it works. So we use this one as an example. Look. So when you take a trade and it works, right? I got in here. If I held this, what you see is a pullback, a push, and then a pullback, and it puts in a new low, right? Bearish price action. So you see bearish price action coming in. So what most people tend to do is panic and take their profit. They take it off. If that continued to push against you even further until it was almost back to break even, people find it very difficult to add another position down here because it looks like in real time that your trade is not working. So what people tend to do is get out, and me included. Yeah. If this starts looking bearish, I've got no idea where the market's going. No one has. So if this looks bearish, I'll be thinking, yeah, I want to get out of it. S&P yesterday. I took this trade here yesterday, yeah? It pushed up really nicely, put in an M reversal. What did I do? Get out. Because it looked bearish. When it got down to here and started putting this bullish price action in, yeah, so we had a little bit of a bullish couple of candles coming in. Looked like it might be starting to find support there. I wouldn't have added there because I haven't really gone far from my initial position. And as it turns out, I was right to get out of that one. But I don't know. If I'd have got into it and added another one, that'd be brilliant. But then when you add another one and it pushes up and gives you a little bit of a pullback, because you've got twice as much money riding on it and twice as much money, it makes you twice as scared every time you see a candle go the other way. So you tend to get out. So I get in and get out. Don't worry about it. Yeah. So if it goes up without me, it goes up without me. That's absolutely fine. Yeah. So here, got into two positions here. Am I kicking myself because I got out there and then it shot up like this? No. I made a nice little 0.5% profit. Thank you. I'm done. On to the next. So yeah, that's why I don't add. If you're a trend trader, then yeah. If you're looking to ride a trend, so if you're, let's say, for example, you got in here, or you got in on that break there, short, and you saw it pull back here, and then you saw bearish price action, yes, you would probably get in with one position there, one position there. Your average would now be there, and then you can ride it obviously down. And then if you're trend trading, you'll be looking to get into a short now and adding another position there, which brings your average down to there. But you see what happens when you add to your positions. The slightest move back, I'm now at break even. Yeah. So while I had this nice profitable trade, which I had a load of profit on, and I added another position, I've now gone back to break even very quickly because I've brought my average price from there by adding that one down to there and adding that one down to there. So I'm making my average closer every time I add a position in, which scares people even more, which makes you 3 times more scared every time you see. If you get a reverse alert in the opposite direction, you'll jump ship immediately. So That's why I don't. I mean, I'm looking to make a trade, yeah? So I got in here, yeah, and I got out there. Because I'm trading mean reversion. I'm not trend trading. Different strategy. But if you want to add one position and add when it goes in your favour, do it. Nothing wrong with it. It's brilliant if you can do it. But 95% of traders can't. This is the trouble. So I do what's easy, which is scaling in and getting out when there's a profit on the table. Do you trade oil? No. I trade oil in futures. So I do trade oil in futures. Oil's on a massive mission at the minute. Lovely buy at the moment, oil. That's going to change though. So we are quite exhausted on this. Are we on the daily? Have we got? Yeah, we got extended on the daily. Right now, guys, look at oil. That's a lovely sell, isn't it? I don't trade it in CFDs. Can you tell why I don't trade it in CFDs? It's the same thing. Tends to move very much in line with indices. So again, it's more volatile, but it's very, very similar a lot of the time. So just overexposure. Makes sense because of the small target and being basically a contrarian method. Yeah. So don't get me wrong. There's nothing wrong with adding to positions, but it's there's many ways to make money in the market. Yeah, a lot of people are scalp, so they'll take that reverse alert and they'll be out with 1-to-1 risk reward. A lot of people will take that reversal alert only because we're in an uptrend. You can trade any way you like. You just need to find the one that works for you. Pound US dollar, a buy. Personally, I wouldn't be buying the pound US dollar. I would be selling it because I'm expecting the US dollar to power up. But it depends, pound US dollar, a buy from the daily perspective, the 4 hour, the hourly, 15, 5, 1. How are you trading it? On the 1 minute chart, I'd say that's a sell at the moment because it's just retesting these highs. On the 5 minute chart, it's in a consolidation. I couldn't tell you which way that's going. M15, we've just had a reverse alert and retest to the south, and we're in a downtrend. Hourly, we're in an uptrend. So if I'm trading hourly, I'll be buying it. 4 hourly, we've had a reversal alert to the downside. So I'll be looking for a retest and drop. We're in a downtrend. Daily, I haven't got a clue. We've just broken bullish, so I'll probably be buying it. You see what I mean? I don't know if the pound US dollar is a buy for you because I've no idea what time frame you're trading, what strategy you're trading. And same for me. I'll be taking different direction trades depending on what I'm looking at. Don't know. That's what I love about M positions. Wait for the first pullback after it and then see price going into the new trend. Yeah. So reversal patterns. If you're a mean reversion trader like me, you're looking for reversal patterns. And that's exactly what the market reversal alert indicator does, is it shows you when a reversal is confirmed. And that is typically going to be one of these patterns. Yeah, an ascending W, a double bottom, or a descending W. So that's a stop hunt. That is a market structure shift. And that is a double bottom. And obviously the reverse occurs on the top. And when that is accompanied with strong price action reversal patterns, like a dark cloud cover pattern like that, a railroad track, a hammer, a shooting star, a 3-bar reversal pattern, which would be like that, something like that. When it's accompanied by that, that's basically what you're looking for. If you mean reversion trading, same as if you're trend trading. If you're trend trading, you're looking for the same thing on a pullback. Yeah. Pullback in a trend. Same stuff. Works the same way. I add when I see momentum and know there is a fast directional move happening, albeit short-term trade. Yeah, momentum trader. Again, momentum trading is another form of trading. I am a kind of hybrid momentum trader. So I trade momentum, but I trade momentum pullbacks. So there's momentum. There's a pullback. So again, say, you know, anything, there's a momentum pullback. Yeah. Momentum, pullback. Momentum, pullback. That's what these are. Many ways to skin a cat. Can you have a look at pound New Zealand dollar? So pound New Zealand, we've just taken out a quadruple top. This candlestick is going to be key. If we get a bearish engulfing up here, would look good for a short. Bear in mind, obviously, the New Zealand dollar has been massively weak when the Aussie dollar news came out. So this is basically a reversion of the New Zealand dollar weakness. So you can see New Zealand dollar is now in London is stepping up and looking a little bit more. It's actually not looking that bullish. But pound New Zealand just had a reversal alert. Again, I don't know, you know, you need to kind of look at time frames on these things, but that is a lovely potential reversal. Yeah. Every time we've tried to crack this, yeah, we've pushed up to this high for the first time. We put a massive bearish engulfing in, came down. We pushed up, we put in a 3-bar reversal, we came down. We pushed up, we put a bearish engulfing in, we came down. We pushed up, we put in a tweezer tops. We started to come down, we tried again, we put in a 3-bar reversal and came back down. We pushed up, we put a 3-bar reversal in, we got a reversal alert. That's what I would say. Yeah, but is this the knock on the door where we actually break through the door? Don't know. Couldn't tell you. Nobody can. But looking at it now, that's a beautiful sell, isn't it? Pound New Zealand. Let's do it. But it's not extended. See, this is the thing. At the moment, we're also in an accumulation. Now, is this the wick off spring before the accumulation and drop? There's so many ways to look at this. And this is why I trade the way that I trade. Because even I am now saying it could go both ways, couldn't it? I don't know which way it's going to go. So the thing to do here is hit the button. I'm in. Right, let's see what happens. I don't know whether it's going up and down, but if this thing continues to go up, I will scale into it and wait for a profit take move to get out of the position. If it goes down now, I'll get out of the position. It doesn't matter, does it? I don't care which way it goes. It's irrelevant. I'm in. There you go. I'm in. I'm going to remind you, who told me to do this? Christy. I'm going to remind you about this trade if it goes wrong. But the reason I'm not jumping in, notice the lot size I've used. Just getting in to demonstrate a point. I'll hold it though. If this was up here, yeah, I would be very interested. In fact, look at this trade, right? So this is why I use the RSI. The RSI is telling me there's been strong buying and no selling. Yeah. So look at this trade here. This was 7th of January. Yeah. So I got in there. Yeah. Because of very, very, very much the same reason as I've just said now. We had a double top. We did a liquidity run on it. It came up and liquidity ran it again. and then it came up and liquidity ran it again, put a 3-bar reversal in, started to push down, had a nice accumulation day, another nice accumulation day. Yeah, so we moved along. It pushed up far enough for me to warrant taking a second position, half an ADR. Yeah, got a reversal alert, took another position. The profit take move started and I got out. And then it went down way, way, way more. But this was my target. Probably about 3/4 of an ADR there in profit. And then look what happened. Went all the way down there. Did I kick myself? I didn't even look at it. Dropped another ADR. Yes, you could have held it. And then it pushed back up again. Yeah, this is what the market does. It pushes. Profit take, push, 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 profit take, push. What do you think we're going to go from here? Profit take. So we've just got in on the profit take, potentially. So it might do that. And if it does that, we'll get in again up there. And when it does its next profit take, we'll be out in money. Yeah, doesn't matter. Just use, and like I say in the boot camp, this is the key, right? This is the key. I don't care about this position. I've taken a directional bias short on the pound New Zealand. What happens next is out of my control. So I will deal with it as it unfolds. But I've got a reason. In this case, Chris has given me a reason to go short. But I haven't really got a reason in this case. But my reason at the moment is all I've got is M15 extension, right? And we've got divergence. So we've got a bit of divergence. Not great divergence, is it? But a little bit of divergence. So we've got a little bit of bearish divergence in there as well. M15 is extended. But I'm not too worried about this trade because if you look at the hourly, we are very, very close when we got the reverse alert to an extension. So if this does now push, yeah, we're going to get extended on RSI. When we get extended on RSI, it means we've had a lot of buying pressure. When we've had a lot of buying pressure, we will get a profit take move, and that'll be my exit. So we'll see how that one pans out. Does that make sense? All covered in the boot camp. What you say that the pullback is the profit taking? Yeah. Would you say that the pullback is the profit taking? Do you mean this one here? This pull? Which one are you talking about? All pullbacks. Pullbacks, right? So with the market and the way it moves, a pullback is one of two things, right? Look at the hard right edge. When we see a pullback as a trader, let's pick a different thing. Let's pick something that's pulling back. Here, this is not a bad example, is it? Right. As a trader, is this a pullback? Yes, it is. Because it's pushed higher and it's now pulling back. Is this the start of a correction to the downside, or is it a pullback continuation move? No one can tell you the answer to that question. Nobody knows, right? So a pullback is either a add for the buyers, the bulls. They're either going to add to their position and drive price higher, or it is a profit take move by the bulls on the position they took down here. We don't know, but we don't care. Doesn't matter, does it? What we know is when that happens, because to do that, you have to do that. To do that, you then have to do that. Where I just hit the sell button on that New Zealand, that pound New Zealand, right? To get out of that position, I've got to hit the buy button. And this is what makes the market go up and down. Yeah. If we all hit the buy button and we never hit the sell button, it would go like that forever, wouldn't it? But none of us would make any money. So we have to hit the opposite side. 80% of the movement in the FX market is controlled by 10 banks. We have zero control over where this is going. And that is the key that you need to understand. And that is the light bulb moment for most people. When I hit that pound New Zealand short, I don't know where it's going. I haven't got a clue. I hope it goes down today and hits 1 ADR to the downside, and I'll just take it. If it doesn't, I'll deal with it. But we don't know. I don't know. Haven't got a clue. No one knows. When everybody comes into these Telegram groups and these Discord channels and says, buy this, this is going to collapse, this is going to do this is going to do that. No one's got a clue what it's going to do. The banks don't even know what it's got to do, right? If I'm sitting in Barclays at the moment, right, and I'm on their dealing desk, I've got 9 other guys against me. It's only me. Have I got enough contracts today to push price higher? I don't know. I don't know what the other 9 banks have got. If they're all going to be selling, I'm going to be in trouble. No one knows, but I'll have a go, and if it comes back, I'll deal with it. That's what the banks do, yeah? The banks don't go long there and put a stop under there and go, oh, damn it, I just lost 25 million. Do you think the banks would be that stupid? The banks accumulate a position, and that's all we're doing. I'm accumulating a position, waiting for the move. I am the banks. I'm accumulating my positions, and if this moves up and it accumulates to the upside, I'm accumulating my position. If it accumulates to the downside, I'm accumulating my position, waiting for the move up. That's why it's called position trading, building a position. And if that position, my ideal world, in my ideal world, that position is one trade. Yeah, that is my ideal position trade. Get in, get out, done. A really good position trade, get in twice, get out, done. A bad position trade, not a bad position trade, it's just I'll probably get out a break even on it, or I'll get out with some profit, scale out of a bit of this, and then scale in as it goes up, wait for the next move down. Yeah, that's all it is. So, you know, when I say this is the direction I'm thinking it's going to go in, I don't know. That's why I think it's going to go based on historical fact. We see it play out over and over again. When this pushed up here, where did I think it was going to go? Where's this black line? Why is this black line drawn on here? It's obvious why the black line's on there, isn't it? It's a support resistance zone, yeah? This is where price went to, got rejected, and then broke through, and then supported. So where do you think it's going to go when it comes back down? There, because this is where the buyers stepped in and said, I want to go higher. So when price comes back down there, the buyers go, no, we want to take it higher. And then the sellers up here go, actually, no, we want to take it lower. Bulls and the bears. We are just riding the waves of the bulls and the bears. So hopefully the bears now are going to step in. Don't know. We'll see what happens. Profit there. I don't know what that is. Don't care. It's a profitable trade. It's 90 pips. It's just under an ADR because this here is an area we have touched many, many, many times in the past. So when we get back down to there, we're going to find some resistance and support. Or we crash through it and it will do that. Don't know. I haven't got a clue. But what I want to do is make money, and that's what that trade is, isn't it? I'm just not going to lose something because the market decided it wanted to go higher. Make sense? There you go. You've had a very, very shortened version of the bootcamp there. If you want to watch the full 10-hour version, it's on YouTube. I mean after either a continuous sell or buy. For a profit, a pullback being a profit take after a continuous. What do you class as a continuous sell or buy? How long, Bozo, is a continuous sell or buy? Is that a continuous sell or buy from there to there? In which case, that's a profit take. Is that a continuous sell or buy, or do you mean this entire move? And you know, when you're looking at time frames, all you're doing every time you're looking at a chart, up here. Every time you do that, you're going down a time frame. You're looking at a zoomed in version of the chart above. So zoomed in version of the chart above. On the 4-hour chart, this accumulation here, is this. Much bigger, isn't it? You go down to 15-minute, and we've only got here the tail end of the accumulation. Yeah. Started here. Yeah. And this is why, I say, again, in the Bootcamp, the importance of time frame, choosing your time frame and sticking to your time frame. If you work a full-time job, you cannot trade M1, M5, M15, M30 hourly at a push. If you work full-time, you're trading 4-hour and daily. You can't look at these lower charts because you haven't got time. If you're sitting at your desk all day like me, I could trade M1 if I want to. I wouldn't, but you can because I'm looking at the charts all day long. Beautiful trade there, look. Getting long, getting short. In, out, done. London session, 2 trades. If I've made my 1%, I'm out, gone, going home. Well, I work from home, so I can't go home. But you get the point. Hopefully that makes sense. But yeah, I mean, and this is the reason, the whole reason I use the RSI. Yeah, the RSI tells me that we, like you said there, a continuous buy or sell. When you get a continuous pressure in one direction or the other, it takes the relative strength index to an extended point. Yeah. So this is a continuous buy that took the RSI from 60 odd to 75. Yeah, and then they sold off. If you wanted to, you could take it from here and say this was a continuous buy all the way up to there, and then it sold off from there. And this is where your fibs come in. Yeah, everybody knows about fibs. Yeah, pullbacks. Yeah, a continuous buy up to there, and then a pullback of 50%, which is a medium pullback, shallow pullback, deep pullback, medium pullback on that move. And the idea is if you have 10,000 contracts go long, some of those 10,000 contracts will be entering the market looking to hold them for 3 to 6 months. Some of those contracts will be looking to hold them for a week. Some of those contracts will be looking to get out tomorrow. Yeah. So buying, the ones that want to get out tomorrow, get out. The ones that want to stay in for weeks, add. The ones that want to get in for a long period, stay in. The ones that want to get out tomorrow, get out. The ones that want to be in long term, buy. Yeah. And this is where you get your trend. This is people getting out short term. This is people staying in long term. Your investors won't be looking at anything below weekly, daily, 4 hours for entry at a push. Intraday, lower time frames. Yeah, so you need to pick your time frame. But it's going quite nicely at the moment, isn't it? Pound New Zealand. Nice retest. Second retest. Again, need to be aware of this. It's going to get stuck here. It's chop. But let's see if we can get down to there. We'll have a look at this afternoon and see where we got to. Okay, so that's all I've got today. As I say, not a lot of opportunities. But, I've just demonstrated there. There's plenty of opportunities. You can hit the button whenever you want to. Just have a reason to hit the button. My reasons are 4-hour and hourly extensions. And as I say, my reasons aren't there today. I haven't got any that I want to take. So we will see what we get movement-wise in London today. And then hopefully we'll get some opportunities to get in for some moves starting in New York. So again, just to recap on the news, Philly Fed 130 and unemployment. Be aware of those, which are pre-New York market open. And then during the afternoon session, we've got crude and home sales, but that doesn't do anything. So nothing really until 1:30 this afternoon for anything that might impact the market. Okay, anything else you need, let me know. Come into the Telegram group if you want to. Obviously, all the information about indicators, strategy, anything discussing, anything you like in there, really, to do with what I do. If you like the stream, give me a thumbs up. It helps. And I'll be back at 2 o'clock this afternoon ahead of the New York session. And hopefully we'll get some decent movement off of these indices. They are looking a bit bullish. I'm just watching them on my other monitor. They are looking bullish, as you can see. We've got tweezer bottoms going in on London at the moment. Loads and loads of wicks to the downside. So it's really bullish at the moment in London. But we'll see how far they can get today. We'll see if we've got that bottom put in. But we'll find out in New York, obviously. All right, so anything you need, let me know in the Telegram group. Otherwise, have a good morning. Hopefully it's profitable for whatever you're in. And we'll see you at 2 o'clock this afternoon.